Hey everyone, it's Jason. So you guys like my all the boxes on the couch over there? That's what happens just about every Black Friday. I order stuff online, it all gets here, and it takes me forever to throw the boxes away. So I've gotten a lot of questions about the stock market, so I just wanted to answer some of the questions that I've received. The first one is, what do I think is going on with the stock market? Well, the stock market's just being the stock market. It's when you look at the indexes, the S&P 500 index, and then the Jones Industrial Average indexes, and the Nasdaq. You look at those, and the market share of those indexes actually are taken up in large part by big companies like Apple or Microsoft or Google or Facebook or Netflix. What these companies do really influence the indexes. Well, really, the fact of the matter is that the indexes have not done. I mean, the market as a whole this year hasn't really done that great. I mean, we did have the indexes giving what we would say, really good returns this year. It seemed like to a lot of people that the stock market was doing really well. But as the averages crept up, if you look at like what the big companies in that index were doing, you'll see that the big companies are actually pulling the index up, even though like some consumer staples have gone down. And I'll give an example of some consumer staples right now that I think are undervalued. Kraft Heinz is undervalued by a significant margin. Ford's not a consumer staple, but it is. But people do know it by know the name a lot. Ford's undervalued by it's way undervalued. The market thinks it's worth half of what I think it's really worth. Kraft Heinz, not as undervalued as Ford, but it's still pretty undervalued. But you look at a lot of the consumer staples, and you'll see that they haven't been performing that well this year. So while the technology sector's been doing pretty good up until now, and while these companies towards the top of the index have been doing pretty well, they still, the other companies that are underneath that take up a smaller market share of those indexes. They've been kind of all over the place. They're not really doing that great. They kind of flatlined, or they might have been down a little bit. So I really think that the indexes are inflated. I think a lot of the big companies towards the top of the indexes, I think they're overvalued. I think Apple's overvalued by a big margin. I looked at Apple, and its market cap right now is pretty close to $1 trillion. I really think it's worth more like $500 billion. I mean, I think it's overvalued by more than 100%. Overvalued by more than 100%. So there's I do think we need a correction. I think a correction would be really good. I think a correction that would actually get the market down to what it should be would look a lot like a recession. And I think a lot of people would call it a recession just because of how much it dropped. I mean, the index would have to drop by like 50% in order to get where I think it's worth. I think the Dow average should be around 15,000 right now. I think it being close to 30,000 is ridiculous, frankly. So, but that's what I think of the stock market. But a lot of the other questions I've gotten is, what should I do with my money? Well, if you're investing for retirement, like through your 401k or through an IRA or a brokerage, and you're just putting it in index funds, ETFs, or mutual funds, just keep doing what you're doing. Just keep putting it in the money, regardless of whether the market's up or down. Don't even worry about it. If you put it in, then if you just keep putting it in, then you'll probably return about 8 to 10%, depending on your allocation between bonds and equities. So just keep putting it in. Don't worry about it. If you're doing funds, you don't even need to watch the market. Just keep putting it in. You'll have a good retirement. The S&P 500 since 1970 has returned about 8% on average. You'll probably do about the same if you're putting it into equity funds, and if you have some bonds in there, the bonds will make it less volatile, but it'll probably bring down the return a little bit, but it won't be as volatile. It won't be going up and down as much. So if you're doing funds, that's what you should do. Don't even watch the market. You have no reason to watch the market if you're in funds. Just keep putting it in. You'll be fine. Don't let it scare you. Don't even watch your portfolio if you're doing funds. I mean, just keep putting it in. It's that simple. As long as you put money in, you'll be okay. If you're picking stocks, number one, you need to learn how to value a company. If you don't have a way of valuing a company, to determine what you think it's worth and what you think it should be worth versus what the stock market says it's worth, don't pick stocks. For crying out loud, do funds until you figure out what you're doing. If you do know how to value companies, then just um, just put your money in undervalued stocks, and you can put in some bonds if you want to, if you're really cautious. I have municipal bonds in one of my taxable brokerages. I have dividend stocks. I have real estate investment trust. I have a portfolio of those. So if you're picking stocks, just stay in undervalued companies, and you'll be able to weather a lot of this out pretty easily. I mean, I'm in my stock portfolio, and my REIT portfolio has done very well despite the fact that the market's going down. In fact, my portfolio doesn't even follow the market. I have 4 regular dividend stocks I'm in right now. Oh wow, we got someone from Uganda. Awesome. That's really cool. So, I got an Israeli real estate company I'm invested in, but all these, which has gone down some since then. I'm looking forward to picking up more at a discount. So just staying undervalued companies. If you don't know how to value a stock, I'll tell you the way I do it. The way I value a stock is I will go and I'll look up the net operating income. I'll multiply that by 6. And then I will add the equity on the balance sheet to that. And that is what I think the company is worth. Now, there are people that do it differently. That's the way I do it, and it's worked for me. You may try it and say, you know what, I think I want to use a different multiple. Maybe instead of 6, maybe I'll use 7 or 4. The lower your multiple is, the more conservative you'll be in your investing. The higher you make your multiple, the more risk you're going to be taking on, because there's a larger room for error because you're using a higher multiple. So again, if you're in funds, don't even watch the market. Just keep putting it in. I think some other people have asked me, you think we're going to have a recession? No, I don't think we're going to have one anytime soon, and I'll tell you why. Even though the market's overvalued, the economic vitals are really strong. So the unemployment's low, inflation's pretty good. If the Fed keeps raising rates, then we may see unemployment go up. We'll just have to see. I'm kind of with Trump. I think they're doing it a little too fast. They're really putting jitters in the market. Hopefully Trump will be able to work out a trade deal with China. I think what Trump's doing with China is great. It's been needed to be done for a long time. They were really kicking our butt on trade, and Trump's finally doing something about it. So I think in the end, even though it's causing some jitters in the market right now, I think in the long run, the United States will be better off for Trump taking a harder line on trade with China. So I don't think we're going to be in for a recession. I do think we're going to be in for a correction. And if there is a correction, it's going to be so big, if it's a correction that actually gets the market down to fair value, that people are going to think it's a recession. I mean, it's going to have to drop by about half. I think I said that earlier, in order for it to get to where I think it needs to be. So that's all for today. I'll try and do more of these. I'll also do some on apologetics too. It's just I'm also a really avid investor, and I do some entrepreneurial stuff. So I do like to talk about some of this stuff too. So I hope this video helps. If you have any questions or anything, just feel free to comment, and I hope y'all have a blessed day.